Good evening and welcome to Liquid Sundays 812. This is our August prep edition. Thanks for hanging out tonight. Got some notes on the chart here. Pretty much pulled a lot of this data from Stock Traders Almanac. Just want to touch on some key data. And then we can look at some charts. Get some levels for the week, per usual. As always, this is not financial advice, and I am not a financial advisor, so please do your own research. All right, let's jump right into today's video. So, August is historically one of the weaker months for stocks, especially post 1988, with near flat or slightly negative average returns. Best years were mostly 1982, 1984, 2000, worse off in 1998. Options expiration periods and the last trading day tend to be mildly positive. Overall takeaway: better month for vacation than for trading. The stock market: Dow Jones tends to rally in every season, not just summer. Winter rallies average the strongest, about 12.9%, followed by spring, 11.5%, and fall, 11.3%. Summer is the weakest, 9.5%. The much hyped summer rally is actually the least reliable of the four. Even big years like 2020's summer surge were outdone by that year's spring rally. Bottom line: no matter how gloomy things look, history shows a rally usually shows up in at least one season. All right, this other note that I want to go over is the Fridays and Mondays matter most. Fridays is when traders reduce risk before the weekend, and Monday reflects weekend news and fresh analysis. A down Friday followed by a down Monday has often signaled major turning points, frequently near market tops or bottoms. Since 1995, there have been 302 such pairs. The 92 that occurred in big bear years averaged a 12.5% drop afterward. Overall, average about 10 down Friday, down Monday events per year, followed by a 6% decline. That takes roughly 33 days. Treat every down Friday and down Monday as a caution flag to reassess the market carefully. In case you didn't know that. All right. So those are our just August little tidbits, little nuggets there of golden information. Let me remove these. I will post in the big chat the market recap, and we'll go over that real quick from last week and what to look for this week, and then we'll take a look at our chart. All right, so let me just grab the chat here, big chat. Is this right here? Hold on. Subscribers got this information Friday in the Alpha Alerts channel. I'll post it in the big chat for everybody. You can take notes and follow along. All right, let me grab this here. Copy. All right, here we go, right in the chat. Hopefully that's coming through properly. I don't know why it looks like that, but hopefully you can read along. All right, so just read this real quick, and then we'll look at the charts. All right, so Matrix macro recap for the week. U.S. stocks posted modest weekly gains in a volatile session ending July 31st, 2026. Recovering from earlier pressure amid the Fed's rate decision, mixed big tech earnings, rising yields, and geopolitical tensions. July overall was soft for tech heavy indexes. Major index performance week ending July 31st. S&P closed at approximately 7489.72, up about 1% for the week and roughly flat to slightly down for the month of July. The Dow closed at 52,485.03, up about 1% for the week and 0.3% for July, its fourth consecutive monthly gain. NASDAQ Composite, NASDAQ 100, NASDAQ advanced roughly 1.5 to 1.6% for the week. Then NASDAQ closed near 28,274. Tech lagged for a full month of July. NASDAQ down 3.2%. Previous Friday, July 24th, closes were roughly S&P 7412, the Dow near 51,947, and NASDAQ near 24,976. The week snapped a short losing streak with Friday's gains led by AI-related tech strength. All right, so for this week, key drivers were Federal Reserve. The Fed held federal funds rate steady at 3.5 to 3.75%, as widely expected. Three members, Hammack, Kashkari, and Logan, dissented in favor of a 25 BP hike, the most dissents in years. Markets viewed it as a hawkish hold. Treasury yields rose afterward. The 10-year climbed to around 4.72 to 4.75, highest level in months, and the 30-year also moved higher. Traders increased odds of a potential September hike, so that's why we had the volatility. Also, we had big tech earnings. Microsoft reported strong results. Revenue $90 billion, up 18%, fueling a sharp rebound in shares. Amazon posted robust beats, revenue plus 20%. Meta delivered record sales but missed on profits amid higher cost spending. Apple faced pressure from chip shortages, weaker guidance services, China commentary. Overall, hyperscalers reaffirmed heavy AI capital spending, supporting the narrative of continued investment, even as investors scrutinize returns and free cash flow. Other factors, of course, Middle East tensions and related supply risks contributed to oil price volatility, and consumer sentiment improved modestly. Broader sectors were mixed. Energy and some cyclicals faced cross currents from higher yields in oil. Volatility was elevated midweek, but calmed somewhat by Friday with the VIX around 16. Bonds, commodities, and other markets. Yields rose across the curve on the Fed outcome, sticky inflation concerns, and oil geopolitical risks. Higher for longer rate expectations gained traction. Oil remains sensitive to Middle East developments. So that's pretty much last week in a nutshell. If you're wondering what was kind of going on under the hood, those are all the kind of key driving factors. Now, on to this week. What to anticipate? Markets still focus on labor market data. There's more earnings, especially growth AI names, and further geopolitical or oil moves. August has historically been a seasonally softer period for equities. We just went over all that. Key economic releases Monday. Tomorrow we have ISM manufacturing and construction spending. Tuesday we've got trade balance, factory orders, JOLTS, job openings. And Friday we have July employment situation, non-farm payroll, unemployment rate, wages. That'll be kind of the main event. This will heavily influence Fed rate path expectations. September hike odds are already elevated. Notable earnings slate include Palantir on Monday, AMD on Tuesday, Eli Lilly, Shop, Uber, Disney on Wednesday, plus others such as Datadog, Airbnb later in the week. Focus will remain on AI-related spending, growth metrics, and guidance. Other watch points: further Fed commentary or shifts in rate expectations, oil prices and Middle East developments, potential inflation and growth implications, Any follow through on big tech AI investment themes versus valuation, higher pressures, broader risk sentiment heading into historically weaker late summer period. Overall tone remains constructive on economic resilience and corporate profits, especially AI driven. But higher yields, oil volatility, and policy uncertainty could sustain choppiness. Positioning appears cautious after July's mixed performance. Um, so, a lot to digest there. Try to make it as simple as possible to understand some of the stuff, but um, you know, it's there's no way around it. There's a lot to digest there, so hence the choppy markets. Um, Hopefully, you're able to go through some of those notes later. It's in the chat there if you'd like to save it. All right, so let's jump into our chart. We'll look at our SPX cash to start, and we'll start on the monthly, seeing as we just closed out a new monthly candle. So I've got my nice little Lux Algo market SMC indicator here, marking out the previous month high and previous month low. And you can see here we got a long upper wick, a long lower wick, and a small body. Previous all-time high, obviously right up here around 676.20, and we have the monthly low at 34. Let's see. I'm sorry, 73.13, about 73.14, right here. So as always, try to keep things as simple. I try to keep things as simple as possible. I take my trusty fib tool. I'm going to take previous month high, and I'm going to take previous month low, and I'm going to snap the fib just like so. All right. We did close. I was noting this on Friday. We did close. Even if you look at the prior month's candle, if you look at June's candle, here we go. Let me just show you right here. We did close in above the 618 level. This is the golden pocket here. So first area that is, I think, going to be important heading into this next month here is going to be 75.39. Heading into this week here, 74.75 will be key support, and first area of resistance is going to be 75.39. This is on the bigger picture, obviously. This is previous. This is the June candle. I'm just looking at that candle because although we're going to look at July's candle is inside of June's candle, so this is technically an inside bar. This would be a bullish inside bar. So still going to be choppy until we can break either out above resistance or below support, more than likely. But for all intents and purposes, I'm going to take the low of July's candle for some more near term levels here. And again, we're still, as of right now, we did gap up higher, about 30, 40-ish, 30, what are we, 30 something points here. So we are trading right up into this 786 level here from basically previous month's candle now. So this is these are your monthly levels. So our monthly pivot for August is going to be 50% here of July, so 74.77. And then obviously resistance is going to be 75.80. Should we clear 75.23? Should we break down 74.77? We're going to look back down to obviously 74.16. 7,400 is very important. You can mark that on your on your chart if you'd like, and pretty much if we do get some drawdown and pull back below 7,400, I do think that that is going to trigger a bigger move down to test support pretty quickly and possibly pull back maybe into this monthly fair value gap. But let's take a look at our weekly levels now. Here is previous week high, previous week low. So I'll do the same thing here. Grab my little fib tool here. Let me just get a new one. It's easier. So previous week high, previous week low. And we've got, there's that 74.12 level, 50% of previous week. Currently in the futures market, we are up above resistance right now. I'm not sure if we'll stay there heading into the New York Open, but it's a long ways away. But currently gapped up above resistance. And if you look here to previous week resistance, it is right around where we're trading at right now. You can see 75.25 is the high from the previous week's candle right here. So I pretty much am always, once we are respecting a support level, breaking above a resistance level, the first thing I do is look to the left and see where the liquidity is from previous weeks, months. And then once we clear those levels, I will look to the extension. So essentially above 75.11, above 75.25, we can target 75.78, and then likely all-time high retest. Should we get some follow through, break below 50% here again, that's 7,400. You can just mark 7,400 on your chart, and you can just set an alert for it. And that's kind of what I do, just basically like this. Just alert SPX 7,400. Should we cross back down below there, I will look to likely short the rips. So that is the weekly. And then again, we're just going to go right down to the next time frame here. We're going to take our daily candle right here. I'm going to do the same thing. I'm going to take Friday's candle, swing high to swing low, resistance, above resistance. You can see here previous week high. And then there's obviously 75.80, like we were just talking about, into the prior week. So right now, just if you're not aware, here is our futures market. So we kind of gapped up, and we're pretty much testing previous week high, right? 75.25, and momentum starting to fade a little bit. This usually the new week opening gap does get filled. So not saying that it definitely will, but it oftentimes does. So if you wanted to try to trade that, wait for a break of Friday's high, and you can trade probably back down into the gap fill. Make sure your MACD or whatever other indicators you're using in alignment makes sense with it. So that might be something for the overnight. So all right, so that's the SPX. Yeah, I'm just going to conclude this portion of the video, and then I will upload it. Thanks for everyone for checking this piece out.